Hello guys, so welcome back to my channel, Ike Trading Lab, and my name is Ike. And in this video I'm going to be showing you the pair that I'm looking to trade this week, and it's on my watch list. And also I'm going to be answering a question that a lot of newbie traders have been asking: how do you know when the trend has come to an end? Now this is New Zealand dollar CHF, and it's very interesting. If you look at the pair closely, you can see this pair has been on a nice downtrend until we had a break over here. Now pay attention to this candle that caused the break, right? It's due to sentimental reasons, right? You know, when you're trading the forex market, there is sentimental analysis, there is fundamental, and there is technical analysis. Now a lot of traders focus more on technicals, while a few also incorporate fundamentals, but barely do you see anybody making use of sentimental analysis, right? But what happened right here with this candle that caused the breakout is a clear case of a sentimental analysis, right? The sentiment of the market, right? So I'm going to explain that to you very well. So now with New Zealand dollar CHF, all throughout the year 2025, this pair has been on a massive downtrend, right? Now the reason being that New Zealand dollar has been on a massive downtrend all through the year, has been bearish all through the year 2025, is simple. The RBNZ, that's the Central Bank of New Zealand dollar, has been in their rate cutting cycle, or was in their rate cutting cycle all through the year 2025 now. But in the month of November, they brought their rate cutting cycle to an end. So that was the last interest rate cut they had, and that is this candle you see over here that caused that breakout. Now if I open Forex Factory and show you what you have on Forex Factory, you can see that Wednesday, November 26, RBNZ official cut rate, and then they cut rate from 2.5% to 2.25. Now you see, so that was on the 26th. So exactly on the 26th, they cut interest rates, and that is what caused the breakout. Now this shouldn't have happened based on technical and fundamental analysis, because when you cut interest rates, it has the effect of reducing the value of the currency, because that is what has been happening all through the year, right? All through the year 2025, they have been cutting interest rates, and the New Zealand dollar has been on a massive downtrend. But the last interest rate cuts that they had for the year was on the 26th, but rather than bearish, the New Zealand dollar became very bullish, right? Now even though the technicals show that yes, price is touching the upper trend line, you should have sold this pair, the fundamental was also pointing to a sell, but the sentimental overrode both the fundamental and the technical. I'm going to tell you why. You see, when they cut the interest rate for the last time in November, which brought their rate cutting cycle to an end, investors knew that okay, there will be no further rate cuts in the market, right? So the sentiment for investors rather turned from bearish to bullish. So despite that rate cut, we saw that New Zealand dollar gain value instead, because investors are looking forward to a bullish New Zealand dollar, no longer a bearish New Zealand dollar. So that is why we had that break at this point in the market with this candle especially. Now after this break happened, the price made a new higher high, which is above this lower high that we have here. So after giving us that new higher high, so now this point in the market, right, becomes our demand zone, simply because there are a lot of buy opportunities. There are a lot of buyers on this side of the give me a minute. Okay, my rectangular tool. There are a lot of buyers at this part of the market, right? You see, so despite the interest rate decision coming out and the technicals pointing to a sell, investors rather came in and bought the market at this point, causing that breakout. So this is a clean demand zone in the market, right? There's a lot of buying orders and buyers at this point. So you notice how when price broke above and created a new higher high, it pulled back into that demand zone over here before buying again to create an equal high at this point, right? Now when price does this, if you look closely, you'll see that the pattern price is forming with this new trend is trying to create is an ascending triangle. You see, we have the break, price touched this demand zone, but again to create an equal high, before coming back to touch the trend line. You can see you need at least 2 touches for the trend line. So now we have a break of structure over here. So we can say this trend has come to an end because you don't have a new lower low now. So the new trend has to begin. And for the new trend has to begin, we have to know how we are going to trade this chart pattern that is forming over here. And this is an ascending triangle, and the way you trade an ascending triangle is simple. You simply wait for price to break above this resistance level, and that is exactly what I will be doing when the market opens. I'll simply wait for price to break above this and closes above this resistance level, then I will take my buy in the market, right? So that's my game plan as the market opens in this coming week. So if you like this video and you find it really helpful and you are serious about improving on your technical analysis, make sure you are following me on this channel so you don't miss out on my next video, right? And if you like that, I'll see you in the next one. So have a good trading week and peace.